And so valuing accounts receivable. We talked about the initial recognition, right? How there's different transactions for accounts receivable, different ways we can finance our business through accounts receivable, invoicing, credit cards that we own, credit cards that issuers own like Visa. So the question is then, how do we value it? Do we know that all customers are going to pay their bills on time? Some won't and some will. Do customers never pay their bills on time? Why or why not? And so let's understand that payment is an entire strategy. So you can go into an accounting department for a company and be in their treasury department. And the entire job of the treasury department is to maximize cash flows for the company. And so many companies I know have the strategy of paying as late as possible without offending their customers, just so that they can maximize their cash flow. And so you can imagine that upsets some customers, but it's a strategy. So some customers try to pay their bills late in order to be able to have more cash on hand at all times. Sometimes customers pay their bills on time because they want to have a strong relationship with the vendor. So a good example, as a consultant, generally, we would expect that people would pay us on time because we work with them pretty closely. But if you're working with a software company, it's very common to pay them late because you've already received the goods and you may only be purchasing every so often. And so something to be very, if you ever heard in the news related to, I'm not trying to be political here, but related to some of Trump's businesses practices where he deferred invoicing, not taking a political stance here, it's just because everyone knows about it. It's just his strategy that comes from this accounts receivable strategy where he was trying to defer payments to maximize this cash flow. That's at least the thought of it, and I think the most familiar everyone is with that example. So, but because some customers don't pay their bills or pay late or try to reduce their bills, we have to value the accounts receivable. Some customers may not be able to pay on their account. Sometimes there's economic situations like what's happening now. Many of my clients right now are having late payments because cash flows are unpredictable. So if we know that there's going to be issues with collectability, no matter what, I tell every one of my clients, small and big, if a customer doesn't pay, if you have one of your customers not paying, that's actually a good thing because many clients have a large majority of clients not paying or not paying the full amount. So if you know the customers that aren't paying off the top of your head, then you're in a pretty good position. It's very common to expect 1 or 2% of your sales to be uncollectible, and you have to build it into your pricing for your products and for managing your business. So there's really two methods of accounting for this bad debt and estimating. There's the direct write-off method and allowance method. Both are acceptable by GAAP.